Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This we get everything you need to know in 90 seconds at 9 o'clock, with news the final round of Australian tax cuts have come into effect. But first, the updated factory PMIs for the giant US economy have brought another diverging set. The S&P Global Market One, the internationally benchmarked version, reported a rise based on new order expansion to describe a moderately expanding sector. But the widely watched local version from the ISM reported the opposite, easing new order levels and a small contraction in the sector. Take your pick. The recent trends in both are opposite too. It's hard to know what to make of these competing views, and markets seem to have ignored them. In China, the private PMI survey by Caixin was much more upbeat than the official government version. This internationally benchmarked Caixin factory PMI reported that in June, business conditions improved the most in over 3 years. But it turns out that's not saying a lot. The improvement from May was marginal. But at least it was positive and underpinned by rising new orders there. And staying in China, regular viewers will know that we have been watching the Chinese government bond yields falling to record low territory as investors continue to snap up these bonds amid pessimism about their domestic economy. Now their central bank has moved to halt the slide. In Australia, CoreLogic is reporting that dwelling values rose 0.7% nationally in June from May to about 8% for the year. The rise is being led by the booming Perth market, up 24% annually, although Brisbane's 16% and Adelaide's 15% annual rises are also strong contributors. Sydney's rises are about the average, but it is Melbourne's falls that offset the big gainers. And staying in Australia, their Stage 3 tax cuts have come into effect. They will benefit about 11 million earners. The plan was originally proposed by the Morrison government, but the Albanese government modified it, so those earning under $147,000 a year got more, those earning more than that level had their gains trimmed by half. The US Treasury 10-year yield is now at 4.48% and up 9 basis points to start the Wall Street week. And the price of gold will start today up $3 at $2,329 an ounce. And oil prices are up $2 at $83 a barrel in the US, while the international Brent price is now $86.50 a barrel. And the Kiwi dollar starts today slightly softer from yesterday at just on 60.8 US cents. Against the Aussie, we're marginally softer too at 91.2 Australian cents. Against the euro, we're down 30 basis points at 56.6 euro cents. That all means our trade weighted index starts today 20 basis points lower at 70.3. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.